Well, for years, America was the land of opportunity. People bought homes, opened their restaurants, purchased hotels, started a franchise business, investing in commercial buildings. Interest rate, they were low. Banks were lending easily. Money was relatively cheap. Many Indian origin entrepreneurs took that opportunity. Doctors invested in commercial properties. Tech professionals, they bought rental apartments. Business owners expanded into hotel, gas station, convenience store, and retail businesses. Everything looked promising. But then the world changed. The West Asian crisis pushed the energy prices higher. Inflation stayed stubborn, and suddenly the US Federal Reserve had very little room to reduce the interest rate. Many people had expected borrowing to become cheaper in 2026. Instead, loan costs have remained really high. Now, imagine you own a hotel, maybe a pizza place, shopping plaza, or a commercial building. Your loan is coming up for refinancing. A year ago, your interest rate was much lower. Now, today, the bank offers a new loan at a significantly higher rate. Immediately, your monthly payment it increases. Your profit becomes smaller. Your financial pressure it grows. Now, can you imagine this happening not to one person, but to thousands of Indian American investors, and that too at the same time? Well, many commercial properties purchased during the low interest rate years are now reaching refinancing deadlines. Property value has adjusted, financing has become much more expensive, and operating costs have also increased. Business owners are therefore facing pressure from both the ends: higher borrowing costs and higher day-to-day expenses. Well, the situation becomes even more difficult for small business owners here. Be it anything, restaurants, retail stores, food distributors, hospitality business, most of them depend on business loans. But while loan payments have become larger here, their costs have also increased. Electricity, transportation, insurance, employee salaries, raw material here. Everything is becoming more expensive. Many businesses are working harder but earning lesser. But then comes another challenge here. Some NRIs may think that I'll simply transfer my money from India and repay the loan, right? But even that is not always straightforward. A weaker Indian rupee and currency conversion cost, it can reduce the value of money moved across the borders. Cross-border transfer may also involve tax and regulatory consideration depending on individual circumstances. So in the end, what does this all tell us? It tells us that global economy is deeply connected. A geopolitical conflict in one region, it can increase your mortgage payment in another. A shipping disruption can reduce your business profit. A rise in oil prices can change your investment plans. And that's why understanding global event, it has become more important than ever before, because today's international headline, it can become tomorrow's personal financial problem here.